Yeah. Hi, friends. So let us look at this small concept, capital maintenance. See, the name of the heading itself says a capital maintenance. Correct. Now, how much capital are you supposed to maintain? Right. First and foremost thing. And what I would like to explain, this capital maintenance concept is purely theoretical. Okay. Yeah. Why are you telling like this? Means so based on this concept, we do not record any journal entry first of all. Okay, so no journal entries are recorded. So that is first point to be uh, very clear, right? See how much. What is this point? Why is this required, sir? Why is this required? Means how much capital we need to maintain. This is to avoid distribution of excess dividend, okay, and which leads to capital crunch. I mean, if you have this excess money, suppose I have 100 rupees excess money, then you have to distribute only 100. So what do you mean by excess 100? What do you need it to run the business for the next year, currently in the future? That you need to keep it aside. Over and above that requirement is there, no, then that is what excess money. From there, if you want to distribute. Otherwise you shouldn't distribute this. Anyhow, I'll explain you with examples that make you the subject very clear. It is very easy, my dear. It has been asked two times in CA final and two times in CA inter for 5 marks. And it is just, I mean, if you know this, if you listen to this small lecture perfectly, right, you will be able to solve it. Not even 5 minutes. That's all. That's all. 5 minutes you will be able to solve it, and you will be able to get 5 marks out of it. That is that important, and it is very simple also. Nothing to bother. Yeah. So, what is this objective? A simple objective. What do we want to say? We do not want to distribute. We do not want to distribute excess. We do not want to distribute excess amount, right? Why do not want to distribute? Yeah, because we do not want to distribute excess amount, and correct now, and we do not want to fall in. Do not want to fall. Yeah, do not want to fall in capital crunch, financial crunch. Correct, no? Right. Yeah. See, if you distribute more money, then obviously there will be working capital problem, and then you have to go and borrow. If you borrow, then again borrowing cost will be, that means obviously cost of the product will go up. Yeah. So it is one kind of what is that? One precaution I can say, right? Yeah. Be careful while distributing. Just think about what is that I need it, how much capital I need to maintain. I need to keep it with me so that my business will and can run smoothly. That is the objective. Yeah, here in this two concept there are, I mean, I can say it is into two, I mean, two type of concepts. Yeah, two type of concepts. There are some changes are there, not changes, I mean, there is a small difference is there. What is the difference? You will understand obviously very soon. Okay, the first one, what do we say? First one, what I say, physical capital maintenance. Let me keep it, physical capital maintenance. Yeah, physical capital maintenance. Yeah, let me put a short form, that is equal to PCM. PCM. Or this is, there is one more way people do call it, that is operating capital maintenance also. Operating capital maintenance. Yeah, operating capital maintenance. Okay, right. Right. Next one is called financial capital maintenance. Financial capital maintenance. FCM, that is PCM, this is FCM. Okay. So the point first, let me clear the first one with the example and everything. Then we'll go to the second one. Yeah, if you see physical capital maintenance, see, you have to keep the money with you. How much I should keep the money? I mean, so that I will be able to run my business smoothly. Correct. But the problem is here, you know, today, suppose you purchase today one unit, one item. Yeah, you bought one item. Okay, what is the price of this item? Sir, price of this item is equal to 100 rupees today. Agreed. But today, I mean, at the beginning of the year, I will say, suppose 1/4, 1st April, it is 100. But will it be same 100 after 1 year also? No, it won't be. Correct. Now it may go to what? Let us say it went to 120 at the end of 31st March. The rate it went up to 120. Correct. So earlier, suppose example, sir, I was doing the business right. Actually, like this, 1,000 units I purchased, sir, at the rate of 100 each. That means you had a capital of 1 lakh rupees. Correct. If you keep, if you maintain only 1 lakh rupees at the end of the year, then will you be able to purchase again 1,000 units? You will not be able to. Why you are not able to? Because earlier 1,000 into 100, that's why one correct now 1 lakh rupees was sufficient. But now I will not be able to purchase 1,000 units. My scale of business will come down. I can't even maintain the what is the level of business in the past. That much also I'm not able to do it. Correct. That's why what do we do in this physical capital maintenance? We will consider, yeah, what do we consider? We consider the current cost accounting. What is this? Yeah, I will tell current cost accounting. Yeah, current cost accounting. One more word I can say replacement cost. Yeah, replacement cost. Yeah, replacement cost. Yeah, in this concept, what we do, the important point, and this is this is where this finance PCM and FCM will differ. Here, for determination of current cost, we will take the specific item actually. One specific, uh, what do you say? Correct terminology. Just a second. Yeah, specific price change. We consider specific price change. Yeah. What is specific price change? This is specific price change means the price change only of a specific item. Yeah. What is specific item, sir? I may be purchasing thousands and thousands of items, sir. Correct, yeah. But out of those, what is crucial to you in your business? Only those items we are going to purchase. Only those items price change is going to be considered. You may be purchasing 10 items, but out of those, which are major to you? Yeah, sir, I have some 2 3 items are which are major. Okay, these 2 3 item price change compared to opening to closing. That will be considered to determine you have how much amount of excess profit. Okay, how much you actually retained. Yeah, that is what we are going to discuss. Let me take an example to make it very simple. Yeah. The example, I have an opening capital. Okay, opening capital. Assume I started the business only on 1/4/2021. Okay, excellent. How much is your money you have, sir? 1 lakh. Excellent. Yeah, 1 unit is equal to, as I told, 1 unit is equal to 100 rupees. Right, 100 rupees on this date. Yeah, that's why what did you do? We bought. Yeah, how much you bought? Obviously, 1,000 items you bought. Correct. Now, 1,000 items at the rate of 100, that is equal to 1 lakh. Right. Very good, sir. And I sold and sold off. Assume all I sold off. All I sold off at 120 each. Yeah, let me say 125 each. Okay, excellent. So what is that amount you realized? What is that you got it? Yeah, that is equal to 1,000 items. Correct. Now into 125, that is equal to 1,25,000. Correct. Normally, generally, if anybody asks, no, what is your profit? Yeah, this is general I can call, or this is considering the historical cost I can call. Okay, right, historical cost method, that is, what do you say, what is your profit? Profit is something comes from P&L, that also you can tell. Otherwise also you can calculate opening capital minus closing capital is equal to also profit. One way. Yeah, but opening capital to closing capital, if you take it, there may be something realized, unrealized, many things will be there. But anyhow, this is one kind of one different way of explanation. Yeah, I can tell what is your closing capital. What is the money you have right now? Closing capital. Sir, I have 1,25,000. Yeah, see, we are considering historical, but this is not the concept of PCM. Okay, right. Just to make you understand. Okay, what is your opening capital? Opening capital is equal to 1 lakh rupees. Yeah, so then 25,000 rupees. Yeah, if you ask any person general language, what will he say? Yeah, this is the profit. Yeah, correct, no? And he will say this is the distributable profit also. Correct. Now, distributable profit in the sense, yes, tomorrow they can declare dividend declaration can happen up to 25,000, and they can clear the entire 25,000. Correct. They can clear entire 25,000. This is true. But now, if they clear 25,000 rupees, what is the money you have? 1 lakh. Yeah, with the 1 lakh, considering the current market prices, will you be able to purchase again 1,000 rupees, 1,000 units, and will you be able to do at least the same scale of business? You will not be. That's the reason. What do we do, my dear? Yeah, this is general historical cost consideration. Now we are coming into PCM. Yeah, in PCM, what do we say? I will say closing capital. What is the closing capital you have? Yeah, I can take it any fashion. Okay, otherwise, one second. Let me change this. Yeah, I say my opening capital. Hmm. Opening capital, 1 lakh. Correct. Yeah. Closing, I mean, opening capital only. What is that I say? Considering specific price change. क्या बोला? Specific price change. Yeah, specific price change. Okay. See, with this opening capital, what is that you purchased, my dear? 1,000 items into 100. Agree? Correct. But right now, assume on 31st March, that is at the year end. Okay, at the year end, the prices have gone up. Yeah, prices gone up. Prices gone up by what percentage, sir? Let us say prices have gone up by 15 percentage. It went up. 15. It went up by 15 percentage means now what is the cost per unit? Now the cost per unit is equal to 115 rupees. Correct. 100 plus 15 percentage is equal to 115. Got it? Right. So now if you want to maintain the same amount of capital, correct? If you want to maintain the same amount of capital, right? I will say adjusted. Okay. What do I say? Adjusted capital. Yeah. Adjusted capital in the sense, what do I say? If you want to maintain 1,000 units of item and at the current market price, yeah, this is today market price, 31st March market price. Yeah, you need to have 1,15,000 rupees money should be there with you. Agree? Correct. And what is your closing capital right now? Closing capital cash I have, sir, 1,25,000 rupees I have. Then what do we say? Boss, your profit is actually how much? 10,000. This is allowed for distribution. Right. So if you take 10,000 rupees out, then there is no problem. If you take, suppose example, if they have distributed, yeah, suppose they have distributed 25,000. They have distributed 25,000 rupees. Under that circumstance, what will happen? What is your closing capital? Your closing capital from out of 1,25,000, 25,000 rupees out. That means you will be having 1 lakh rupees in hand. Agree? You have 1 lakh rupees only in hand. And what is the need? What is the need? Need is equal to 1 lakh 15,000 rupees you need. That means you are going to, what is this? You are going to negative profit. I will say negative profit. Yeah, what is this negative profit? Can you ask the members now? Once you declare the dividend, you cannot ask the members to, yeah, pay me here back because I paid excess. Sorry, my dear. Then your problem starts because you need further money. Then obviously you have to go to bank. You have to borrow. Correct? No, and again borrowing cost will be there. It will start. The problem starts. That's why be careful. Are you maintaining the? Are you maintaining? That's what. Are you maintaining the? What is the capital required for the smooth business? Right. So what is the difference between, right? So this is what physical capital maintenance. So what is the difference between physical capital maintenance and financial capital maintenance? There is only one small point, my dear. Here we will consider the specific price change. What do we consider? Specific price change means those units which you purchase, your company purchases, that price, those units price change only is going to be considered. But with respect to financial capital maintenance, correct, now we will consider the inflation in general, India inflation rate. Okay, we'll consider RPI. Yeah, what is it? RPI, retail price index. Retail price index. Retail price index nothing but inflation. Yeah, inflation. Inflation of what? Inflation of the country. They will take, under this method, they will take the inflation of the country. But see, this RPI is not specific to your unit. Correct now. Suppose I am purchasing what? I am purchasing and selling mobiles, sir. Super. But in RPI, what do they consider? They will consider cement increase, cement correct now, cement prices increase, steel increase, water, everything will be considered. Correct? Right. This is more specific to you. This is in general. That's all. That's all is the difference thing. Okay, same calculation, same thing will run. Okay, what do you say? Same calculation. Let me put it here. Yeah, we'll say opening capital. Opening capital is equal to how much? 1 lakh. Yeah, now if you adjust it with, yeah, adjusted with RPI. If it is adjusted with RPI, sir, my RPI is equal to RPI. Price index is equal to the inflation for the country is equal to 5%. Some number. Okay, under that circumstance, what do you say? I will say 1 lakh. Correct? No, 1 lakh plus 5%. I will say that means I will be in need of 1 lakh 5,000 rupees at the end of the year, so that then I can run the business. Correct? No, right. And what is your closing capital right now, sir? Yeah, closing capital I already sold and I bought 1 lakh 25,000 rupees. I got, sir. That means we will say, boss, your profit is equal to 20,000 rupees. This 20,000 you can distribute it. Even after distribution of 20,000, I will be able to run my business smoothly without depending upon outside inflow of money. That's it. Okay, right. So if the question asks, if the question asks physical capital maintenance, you are supposed to take specific price change. If the question asks financial capital maintenance, you are supposed to take general inflation index, that is RPI, retail price index. Also you can consider it, and the method of calculation will remain same. Chalo, let us look at few questions which are asked in the past for CA Inter and for CA Final. Right, just a sec. Yeah, look at this concept capsule 7 which is given in CA Final, but same question has been asked in CA Inter also. Right, this year of which year they have asked, that I have not actually I forgot to note it, but it was asked in the examination. Just look at this, my dear. So easy question. Mr. Unique commenced business on 1/4/2017. Yeah, with 20,000 rupees. Okay, 20,000 is my opening capital. Can I say? Yes. Now represented by 5,000 units at the rate of 4. Yes. So that 5,000 units at the rate of 4, that is what? 20,000 rupees you utilized. Cool. During the year 2017-18, he sold full 5,000 units. He sold at the rate of 5. So what is that he realized, my dear friend? Yeah, he realized 5,000 units into 5. If he sell, obviously 25,000 rupees he is going to realize. Correct. And he withdraws 4,000 rupees. 4,000 means he declared dividend. Okay, dividend declaration happened. How much dividend declaration? 4,000 happened. If it is happened 4,000, then how much money he has actually? Yeah, this is the capital left. Correct. Now capital left for the future is only 21,000 rupees is left. Right. Whether he did correct job, good job, bad job, we will see that now. Okay, on 31st March 2018, price of the product is equal to 4.6 per unit. Yeah, see, price of the product, this is specific. Yeah, this is specific. Yeah. Next, average price index. Average price index is general, that is RPI. Yeah, whatever average or retail price. Some inflation rate. They can use any one word. Okay, that we cannot stop them. Initially, it was 100 and now it went to 120. You know that indexation and etc. We can do it now. Financial capital maintenance at historical cost. He's asking at historical cost. Yeah, in historical cost, actually he made a profit or not? Correct. Now, how much is that historical cost? 25,000 rupees is his closing capital. Correct. Now, opening capital is equal to 20,000 rupees. Agree? Right. So he made 5,000. Out of 5,000, 4,000 rupees is distributed. Still, you have a profit. Correct. No, 1,000 rupees. This is historical cost. What is this? Historical cost. See, we have explained here. At historical cost, closing capital. Yes, closing capital is 21,000. Opening capital at historical cost. Yeah, that is equal to 20,000. So 1,000 rupees excess you have. But that is not the correct thing. That's what he will ask next question. He is asking financial capital maintenance at current purchasing power. See, financial capital maintenance. For financial capital maintenance, you know RPI. This is what you are supposed to consider. Tell me, my dear, what is your adjusted opening capital? I will say adjusted capital is equal to 20,000 rupees. Correct? What are you supposed to do? Divided by, yeah, what is the opening is equal to 100. Correct? Now into 120 today. So it will come to how much? 24,000 rupees is required. If you have 24,000, are you getting my point? Right. 24,000 rupees if you have, then you will be able to run the business. Because why 24,000 is required? Because prices have gone up by 20%. See, 100 rupees gone up by 120 means isn't it 20% gone up? Yes. So 20,000 plus, correct na? 20,000 plus 20% if you calculate, that is the same number only will come, no? Exactly. Right. But how much capital you have right now? Out of 24,000 requirement, we have only 21,000 rupees is there. That means actually you are in short. It's a negative profit of 3,000 rupees. Getting my point? That's it. Come to the matter here. Financial capital maintenance using the current purchasing power. See, closing capital, yes, we have 21,000. Yes. Opening capital at closing prices. Yes, that is what adjusted opening capital I can tell. Yeah, which is equal to, yeah, 4 rupees. Yeah, what you can say, 4 rupees plus 4 rupees plus 20%. 4 plus 20%, you apply your calculator. Automatically 4.8 will come. Correct na? 5,000 into 4.8, 24,000 rupees will come. Perfect. So 21,000 minus 20, this is equal to negative capital. It is retained profit minus means actually you are in need of money. If you want to run same scale of business of past, you need this much of money. Negative you are already. That means your decision of 4,000 distribution is in a way not correct. Correct? Yes. Now let's go to the question once again. Physical capital maintenance also is asking. For physical capital maintenance, what are you supposed to consider? I told you specific price you have to consider. Specific price, what is the specific price increase? 4.6 is the increase. Right, no problem. 4.6 means you have 5,000 units into 4.6 means 23,000 rupees is required. Yeah, that is what here. 23,000 rupees required. But you have how much? 21,000. That means 2,000 rupees you are in short. That's it. I'll take you through the CA inter question also. That will make you further clear and better. Yeah. See this concept capsule 10 from CA inter material. Yeah, 1 second. Yes. So just a minute. Yeah. See this question concept capsule 10. Yeah, it was asked in CA Inter January 2021. See, very easy question, 5 marks question. You don't need even 5 minutes. Okay, that easy. Explain how the financial capital is maintained at historical cost. Read the question. Historical cost he is asking. It's easy. Correct. Kishore started a business at the 1st April. Okay, 15 lakh rupees. Represented by 75,000 into 20 rupees each. Okay, simple. No matter. Right? Yeah. Now, what is that? In order to maintain the capital intact, same amount of capital, calculate the maximum amount that can be withdrawn by Kishore during 1920. Okay, if the financial capital is maintained at historical cost. See, very easy. Correct na? 75. So what is your opening capital, my dear? Your opening capital is equal to 15 lakh. Correct. What is your closing capital? Closing capital means you sold 75,000 units. You told entire stock he sold. He only told 75,000 into 30. Yes, 75,000. 75,000 into 30. That is equal to 22 lakh 50,000 rupees is what your closing capital. That means you have how much? 7,50,000 rupees is the excess amount. Agree? Right. See, 7,50,000 rupees is the excess amount which is permissible for drawing because you are following the historical cost basis. Got it? Because they never asked us to calculate the correct purchasing power, RPI, correct na, or specific price change. Nothing was asked. That's why you don't need to bother too much. Yeah, you will tell simply 7,50,000 is the maximum amount that can be withdrawn by Kishore. See, so simple. Do you need 5 minutes for this? Right? Not required. Yeah, in the same fashion. Even for CA in right, this question has been asked in CA Inter and same question is been repeated in CA final. Yeah, just now we saw no same thing like 20,000, 5,000 units, correct na 5 rupees per unit he sold. We purchased at 4 rupees. Check. It is 100, 120, 4.6. Isn't it same question, my dear? Exactly. That's it about your capital maintenance concept. It is not something great. It is very small concept. Right. I just in nutshell, I just would like to revise it once again. If it is a physical capital maintenance, then go by specific price change. Okay, I mean whichever the products you are dealing, those products increase or decrease in the price only has to be considered, but not the general market. Okay, but if it is a what do you call financial capital maintenance, we will be considering the normal index, normal price index. Okay, or inflation, I can say. Right, that's all is the difference. Otherwise it is right, easy concept. Right, thank you and wish you the best.